How often do you drive your car blindfolded? Hopefully, the answer is never. But here's the real question. Are you flying blind in your business? Because if you're not tracking the right numbers each month, that's exactly what you're doing. I'm Jay Boykin, and I help small business owners create clarity out of the chaos. Too many small business owners focus only on their revenue, but that's like staring at your speedometer while ignoring the fuel gauge, engine temperature, and the GPS. You might be moving fast, but you could be moving towards a breakdown. In this video, I'm going to break down 3 key metrics that every successful small business should track every single month. Not dozens, just 3. And once you know them, you'll be able to make smarter decisions, avoid surprises, and actually grow with confidence. Some small business owners will focus on the wrong numbers when they look at their business. While the real key to success, it could be hiding in plain sight. Tracking the right metrics can mean the difference between thriving and barely surviving. In this video, I'm going to break down the must-know numbers that can help you make smarter decisions and grow your business faster. Tracking the right metrics, it helps you stay profitable, avoid surprises, and make data-driven decisions. The financial metrics that you can track can vary from business to business, but there are certain critical metrics that all businesses should be tracking. So number 1, cash flow. Why is this critical? Cash flow is the lifeblood of any business. Many profitable businesses fail because of cash shortages. Did you know that 82% of small businesses fail due to cash flow problems? It's not because they have a lack of customers or bad products, it's simply running out of money. If you're a business owner, the single most important number you need to track, it isn't revenue, it's cash flow. So you've got 2 cash flow metrics. There's operating cash flow, and that is the cash that's generated from your core operations. And then if you are a startup business, you really need to understand your cash burn rate. How quickly is cash being used up? Cash flow is simply the money that's coming into your business and the money that's going out. If you think of it like your personal bank account, if more money is leaving than is coming in, then you're going to be in trouble fast. So cash inflows are things like your customer payments, your sales, any loans that you might receive, any investments. And your cash outflows are things like your rent, payroll, supplies, marketing, and those loan payments. The key takeaway here is that positive cash flow means that your business survives. Negative cash flow means that your business, it's going to struggle. So now, there's a couple of easy ways that you can track your cash flow. The simplest method is just to put together a simple spreadsheet. You can do something in Excel or Google Sheets, and you can have a column for the date, cash inflows, cash outflows, and you can keep a running cash balance. Update this weekly, and this really gives you a real-time view of your cash situation. Now, if you're using an accounting software, something like QuickBooks or Xero or Wave, these tools will do it for you. You can link these tools to your bank account and it will track your cash flow in real time. If you don't check your cash flow weekly, you're running blind. So set a reminder to do this every single Friday. Take a look at what your cash flow is looking like. And here's a pro tip for you. always try to have anywhere from 3 to 6 months of cash reserves on hand. I've got another video coming up that's going to explain why your P&L shows a profit and why your bank account is running on fumes. And I'll teach you why that is likely happening. Metric number 2 that you should be looking at is profitability. Revenue is vanity, but profit is sanity. Businesses need to ensure that they are actually making money after their expenses. Net profit is the amount of money that a business has left after you subtract all of the expenses from your total revenue. It represents the actual earnings of a business after you cover all of the operating expenses, your taxes, and other things. So your formula is pretty simple. It is net profit equals total revenue minus total expenses. I'm going to give you a perfect example. If you have a business that earns $100,000 in revenue and it spends $30,000 on product cost, $20,000 on salaries, $10,000 on rent and other expenses, your net profit looks like this. It is the $100,000 less the $30,000, the $20,000, and the $10,000. That equals $40,000 in net profit. And if you want to figure out your net profit margin, you take that $40,000 of net profit, divide that into the $100,000 in revenue, and then multiply that by 100. That is going to give you 40%. So again, your revenue does not indicate your true financial health. You want to track your profitability, and it's really going to help you with decision making. It's going to guide your pricing. It's going to let you know if you need to cut costs, and it's going to let you know if you're making smart investment choices. Here's another pro tip for you. Track your net profit margin over time. So looking at seasonality and how your profitability may be fluctuating is very, very important. The final key metric that smart business owners should look at very frequently is revenue growth. Here's why that's critical. A business that isn't growing is at risk. This metric really shows your momentum, and it'll help you understand your market demand. So if you track your revenue month over month, year over year, you're going to really understand what's going on in your business. Why is revenue growth important? Well, think about it this way. If your revenue isn't increasing, it might mean that your business isn't expanding. And also in today's economy, staying the same could mean that you're falling behind. Your operating costs are going to continue to creep up, and that's going to erode your profitability. So you could have a problem looming if you're not tracking this. So there are many metrics that you can analyze in your business, but most small business owners, they've already got a staggering amount of work that they've got to do. You don't have time to track 50 different metrics, but these few key metrics can give you critical insights into your business. So if you want to learn more about key business insights, click the link in the description to get my free small business assessment. And let me know in the comments, what was your biggest takeaway from today? Let me know what metrics you're tracking in your business. And if you found this helpful, hit the subscribe button, hit the like button, and I'm going to provide some no BS advice to you every single week. Now, we talked about tracking your revenue growth, and if you want to learn some key ways to increase revenue in your business, I've got a video for you here.